Retail investors facing losses due to market misconduct may soon find it easier to seek civil recourse. The Monetary Authority of Singapore is looking at ways to enhance safeguards, including a grant scheme to cut back on legal costs. At the same time, new fund strategies and research support will also be rolled out to strengthen the local equities market. Nadira Zaidi reports.
The ups and downs of the stock markets can be difficult to navigate. But what if you were misled by financial statements? Taking civil action could be slow and costly, which is why the central bank is looking at ways to ease the process for retail investors. With the enhanced plans, investors can ride on existing court action to seek compensation. This means less legal work and lower legal fees as compared to if they started their own independent action. MES is also looking into allowing representatives to organize and carry out legal action on behalf of investors. Plus, there could also be a grant scheme to defray costs when seeking legal action on market misconduct cases. Market players welcome this move, but say deterrence is still key.
As people also say in the private space, we need to have the tools in the event that when things go awry. And so these sort of funding programs help to enable investors to have some financial support in the event that there is an actionable case.
To further boost investment activity, MAS will be giving 1.1 billion Singapore dollars to 3 asset managers to invest in the local stock market. Avanda Investment, Fullerton and JP Morgan were picked out of over 100 fund managers as part of the Equity Market Development Program. They were selected based on how well their strategies aligned with the program's goals, plans to attract third-party capital, and their commitment to growing Singapore's asset management and research sectors.
We thought it would be better for us to proceed with this tree while we continue to assess and work with the other asset managers, rather than to hold back all the proposals and finish assessing all of them before we announce the full list. So we take it in stages. So some of the other asset management companies that will be picked for the subsequent phases of EQDP, we will share with everyone by fourth quarter this year.
Fullerton says it will launch a dedicated Singapore Equities Unit Trust as it sees demand for local and Sing dollar denominated assets both here and abroad. Market watchers say this will support MAS's plans to encourage investor diversity.
The previous investors in SGX were doing it out of full Asia pots or global pots, or they were relatively limited in terms of their scope or the risks that they were willing to take. And so all of these things are facilitated by additional capital that is carefully allocated on the back of a plan, a strategy. And I think MAS is in a position now where it's able to support a range of strategies to completely fill out the picture.
As for equity research and listing support, $50 million will also be set aside over the next 3 years. It aims to boost outreach and engagement, especially among younger investors. More measures will be announced later this year.
For more on this, we have a member of the Equities Market Review Group in studio. Neil Parekh is Deputy Chairman of the Global Finance and Technology Network, set up to improve Singapore's financial connections all around the world. Now, Neil, Singapore's stock market, as you well know, has long struggled with liquidity and low valuations. So do you expect this injection that we've just talked about to meaningfully shift investor sentiment or trading volumes at all?
Good evening, Jill, and thanks for having me back. In my view, these are substantial steps addressing some of the needs of the situation very directly. First and foremost is the allocation of $1.1 billion to 3 well-known asset managers with deep expertise in the Singapore dollar market. And I think they will be able to get more capital behind that, crowdsource more capital behind that. Also, in my view, they will help the ecosystem develop because they'll be able to attract quality research analysts as well as provide trading liquidity, which has been absent in the market. So I absolutely see this as a move in the right direction. In my view, I mean, again, as we say, Rome wasn't built in a day, but we are certainly taking the right steps as we go along. From the announcements in February, when there was a clear enunciation of the priorities for the review committee, you're seeing some actual execution of some of those answers that are coming to be, some of the new policies that are being put together to deal with some of those situations. And there's more to follow.
There is. I want to talk to you about the next phase and also the manager mix looking ahead. But let me ask you first, why focus on small and mid-cap stocks? I mean, will that broaden the market participation locally, but also regionally?
I think that's what's been absent.
Yeah.
So we need to do that. Yeah. I think certainly if you look at the STI 30 stocks, there is enough liquidity there. You look at the 3 large bank stocks, many of the REITs, there is enough liquidity there. The float is there. The issue comes when you get beyond the index, beyond the 30 stocks, is there very limited liquidity. So if you are a potential new issuer coming to Singapore to list, to raise money in the market, one of the first things that you're going to look at is valuation. But valuation is driven by liquidity and the research following. So it's you can't look at valuation in absolute. It's really, you've got to put a few things together. So the endeavor of the committee, under the leadership of Deputy Chair of MAS, Minister of National Development, Chee Hong Tat, was to come up with a more wholesome answer to some of the issues that the ecosystem faces. And allocating 1.1 billion with 3.9 billion more to follow is one step in that direction. The moving to disclosure-based rules while making sure that we have the right protections in place, as you mentioned in your opening comment, is very important because at the end of the day, we need a balanced system between an investing public that is quite astute, at the same time attracting issuers who see the value of listing in Singapore.
All right, so let's talk about that ecosystem and building that ecosystem you mentioned. And one of the factors you also talked about very briefly was research. So there's $50 million that's been set aside for equity research. Why is this so important in helping Singapore reclaim its lead as a capital raising center in Asia?
So when there's a new listing, invariably, it's not a mega cap listing. It is a small or a mid cap with the aspirations to be a mega cap down the road. Let's face it, many of our larger companies in the STI index not so long ago were much smaller companies. So if you list here, you got to be of a certain size. And the research coverage for those companies is super important because for the retail market, the institutional market, the family office market, it's important to know what the company is doing, how the company is doing. So you have to look at existing small and mid-cap issues. You have to look at pre-IPO issues. And what I found very interesting that you may have seen in the announcement, that there will also be an allocation to support research in private companies that have a strong base or interest in Singapore. And that's very important because in my view, that will be a pipeline for future deals, for future IPOs going forward. So that 50 million is going to be, in my view, very well used.
Okay. And perhaps maybe not even enough, but MAS
well, we shall see.
MAS has said that is only the first phase, as you also pointed out. So what are the benchmarks that we're looking to assess whether phase 1 is succeeding or not?
Well, since we last met here, we had Liberation Day. And you may have seen SGX index levels reached record highs. So things are changing. And I think, to me, what the investor base is looking at is there are quality companies on SGX that were very underpriced when I last met you here a few months ago. I think it was in February. And have clearly identified them as future winners. And that's why you see some of the index companies going up, but also some of the smaller companies also rising in tandem. So I think we are moving in the right direction.
So
these
what's
incentives,
the first milestone that you'll be saying, check, yes, we're heading in the right direction and we've actually hit
I think one has to look at a few things. First and foremost is new corporate listings.
Okay.
Then new ETF listings, because the plan has a fairly elaborate incentive structure for ETFs as well as depository receipts. I think that's very important. We have to look at a broad base of instruments rather than just be obsessed with corporate IPOs, because the reality is for an exchange, it has to be a broad base of products. That really brings liquidity. Depository receipts is great because this is mutual between us and our regional players. So the Singaporean investors can have access to, say, high growth companies in Southeast Asia that can list here, and you can buy them in Singapore dollars, and vice versa, where Singaporean companies can do a listing on, say, the Thai Stock Exchange or other exchanges. So I think that's a very important component. The listing grant that MAS has put there is also very important because it's $2 million a year. And I think that's super important because that's been extended till 2028. And that also provides a cushion for young companies. For large companies, getting $2 million from the MAS may not mean a lot, but for a young company that's looking to go public, it does mean a lot.
Absolutely.
So having an extension of that is super important.
And the next time for phase 2, you will come back and speak to us about the new manager mix to join as well in this whole program. Thank you so much, Neil.
Look forward to that. Thank you, Jill.
And I've been speaking there with Neil Parekh, Deputy Chairman of GFTN.